I want to get more now on the US's employment prospects. I'm joined by an economist who's been studying the global labour market for more than 30 years. Richard Jackman, professor at the London School of Economics, has also worked at the World Bank, joins me in the studio now. Thank you so much for coming in. Good to see you. So I want to start by asking for your expectations of this jobs report. Are you expecting to see a slowdown in hiring for the month of May?
Yes, I think the American market is unfortunately struggling to achieve jobs, and the reason is exactly what you've said. It's dominated by the housing market, the residential construction market, and that is feeding on itself in a spiral of a downturn of prices, a downturn in construction, a downturn in people's incomes. It's just feeding on itself, so it'll be a very slow process to escape from that. So I think the labour market will continue to struggle. And
how slow will this process be? Because, presumably it's going to raise concerns about the intensity, about the duration of a soft patch.
Yes, yeah. No, I can't see any immediate source of growth to compensate. The external situation is pretty bad. Japan, of course, Europe are all in a bad way. China is, as your news item just said, likely to raise interest rates over the weekend. So I think the export situation is bad. The renminbi alignment is still badly wrong, as it has been for a while. I think the government has been doing all it can, and I think quantitative easing has been helpful, but has now outlasted.
Doesn't seem to have done anything for the unemployment rate.
Well, what would have happened otherwise? I think interest rates...
That seems to have been the expectation. But
interest rates have been kept are very low, and I think quantitative easing may have helped at one point. But it seems to me now that interest rates are low anyway because of the depressed state of the economy, and they don't need any help from quantitative easing to keep them low.
Yeah, it certainly seems Ben Bernanke consistently arguing that unemployment is still high, and that seems to be very much the rationale behind QE. I mean, implications for QE3?
I just don't see any point in it. I think when the recovery comes, it's important to absorb back all the money that has been issued, but given the way monetary policy works, that's very straightforward. I don't see QE as being an issue, basically. It's not had much effect, and it seems to me it won't have much effect.
I mean, it's been a bit of a rough week in terms of economic data coming out of the US because, you had the ADP private sector survey showing an increase of only 38 jobs in the month of May, and this was versus expectations of 170,000, as you well know. And then jobless claims were a touch disappointing as well. And it seems as though there's been a bit of a turnaround in this situation, because I remember speaking to people, just a couple of months ago, and they were saying, actually, if we can get an increase of 200,000 job hiring a month, if we can get above that level.
It's very difficult because these things, there's always wobbling. It's just wobbling. And whenever it goes slightly up, people get excited. Whenever it goes down, they get depressed. But basically, the situation is fairly stagnant. Some months will be better than others, but basically things are not very good.
So when are things going to pick up? When are we going to see unemployment drop below 8%?
We've not had a collapse in house prices like we've had like the Americans have had, and indeed to some extent we've had in this country. But basically the collapse in house prices in America has been unprecedented in world economic history. And it may well indeed be 5 years or so before house prices have sort of bottomed out and started to recover. And there's no way of accelerating it, because if one raises interest rates now and pushes house prices down, just create endless more insolvencies, another credit crunch.